I put on record that I find it strange and alarming that the PIC board is running a parallel investigation into matters covered in particular by the terms of reference of this commission. I will later make further submissions in this regard, but my view is, with respect, that it is totally improper. And it may be necessary, even at an early stage, to consider calling the chairperson of the board to come and explain to the Commission why this is happening. Notwithstanding all this, Mr. Madhava is here, and he has informed me that notwithstanding the immediate suspension, he is ready to testify, and I would then please require Mr. Commissioner to administer the oath.
Thank you, Advocate Glibber. I think we can proceed if the witness is here. We've taken note of what you've informed us this morning. Your full names, please. Do you have any objections to taking the prescribed oath?
No, sir.
If you have no objection, will you swear that the evidence you're about to give will be the truth, the whole truth, nothing but the truth? Say so help me God.
So help me God.
Thank you. Yes, Mr.
Thank you, Mr. Commissioner. Can I please ask your leave again to be seated while we read the evidence? Thank you. Before we start with the statement you have prepared, Mr. Madhava, can you just confirm that you have received this morning a letter by the PIC informing you of your immediate suspension?
Yes.
Did they provide the reason for the suspension?
Yeah, the reason for the suspension was that as head of the division, they need to do, and they've done a number of...
Sorry, can you pull your mic a bit closer to you?
Just speak in the mic. Just speak in the mic. That's it.
The reason given is that, there was an internal audit, investigation into the IO transaction, and as head of the division, they found it proper to suspend me with immediate effect. Further investigations will be ongoing. I must not talk to PIC employees, at this stage, and that in the the documentation on this IO transaction, which I signed, according to the letter, indicate that I should be suspended. I also just want to put it on record that this transaction took place when I was overseas. There was a DOA in place, and I was not directly involved in this transaction at all, but obviously as head of the division, I carried the responsibility.
Thank you. We will later come back to the IO transaction, but then can we start on page 1 of your statement? Can you just tell the Commissioner and the members who you are, your qualifications, when you were appointed by the PIC?
Yes, my name is Fidelis Madhava. I started with the PIC in 2007, and I've held a number of titles, in that organization. I started as a portfolio manager of resources, and I'm currently the executive, or as of last night, the executive of listed investments, reporting directly to the CEO. My qualifications include a Bachelor of Science in Chemical Engineering, an MSc in Industrial and Administrative Sciences, And I've also got an international executive development diploma from Wits and London Business School.
Yes, please continue.
I've been requested by the evidence leader to go into details of how we invest in the listed space. The listed investment portfolio comprises of the following divisions: internally managed listed equity, externally managed funds, fixed income, and dealing. PIC invests funds on behalf of its clients. Broadly, the mandate covers, as we say, listed equities, listed fixed income, securities, cash and money markets, unlisted property, and for our division, the listed investment divisions covers the listed equities, listed property, listed fixed income, cash and money markets, the portion of the mandate from the client. I must say, a listed investment constitutes the bulk of the money that we manage. As of 31st March 2018, roughly 80% of the portfolio was invested in listed asset classes. And that amount was about 1.96 billion rand. In respect of listed investments, mandates have been provided by the Government Employee Pension Fund, the GPF, the Unemployment Insurance Fund, the UIF, the Compensation Commissioner, CC, Compensation Commissioner Pension Fund, Associated Institutions Pension Fund, and other smaller clients. Transactions concluded by the listed investment divisions will be dealt through the following governance committees in line with the delegation of authority, the DOA of the PIC. The Portfolio Management Committee for listed investments, which we refer as to PMC listed. Investment Committee, IC, and PIC board as appropriate. And I'll go into that with reference as to when we need to go to PIC board. The members of the PMC listed currently include the CEO or the two executive directors, which is the CEO and the CFO. Normally, the CEO would be the chairperson of the committee. Then we've got executive heads of risk, legal, research and project development, and investment management. There is also the executive heads of listed investment, and then the general managers of in the subdivisions of listed investments. That is the general manager of internal equities, the general manager of externally managed funds, and the general manager of fixed income.
Can I just interrupt you here in coming back to the AO investment? Would it then be correct to say when this investment was considered by the PMC listed, the committee would have been chaired by the CEO, and if not available, then by the CFO?
Yes. So one, either the CEO or the CFO, and my understanding when it happened was, I think the chair was the CFO.
Thank you.
You of course heard that, or you know as a fact that is so. It was the CFO said.
I think it is a fact. Obviously I wasn't there when I say I heard. I read, on the minutes.
So to make it clear, the documentation, the minutes, will provide that information.
That's right. There may be circumstances where proposals are referred to PIC board or to the client.
Sorry, I must again interrupt you there. Will happen.
So a good example would be the $5 billion rand bridge that we did for ESCOM. So when we did that investment, because of the urgency of it, but also because ESCOM at that time was in the media for corporate governance reasons, etc., we had to consult. We went through the processes, PMC, IC, and then we referred this thing to board because of the sensitivity of it. But more importantly, we also actually consulted the client. That would be an example where we go all the way to board. And another example would be when we did our first investment in the rest of Africa. We put we've got 5% allocation to the rest of Africa, of 5% of our AUM, assets under management, to the rest of Africa. And when we did the first investment, we felt it was proper to consult the board, to tell the board that we were going to make this investment, this was the target investment, what they did, etc. So that's another example.
What was the name of the entity that you invested in?
EcoBank. EcoBank is in over 30 countries in the rest of Africa, and we are one of the large shareholders there, alongside the likes of Nedbank and the Qataris and so on.
Can you perhaps remember or give an indication of the percentage of shareholding in EcoBank?
At that time, our holding was 20%. When the other shareholders came in, and there were equity raises, etc., we were diluted. I think currently we're around 13%.
Thank you.
My colleague has a question
just
here.
when you said that you consulted the client, can you just say specifically which client?
So the client in this case was the GPF. And so we consulted the GPF just to let them know that there was going to be this investment.
But just to make it clear, when you talk about that, that is the ESCOM matter, not the EcoBank matter.
No, this was the ESCOM 5 billion rand bridge.
Question, Mr. Madhava. The bulk of the PIC money is in listed companies. Why is that so? Because people have been saying it looks like too much money is in listed companies versus sectors that can grow our economy. Why is it so that the bulk of the money is in JSE companies?
No, it's a very good question. I think the answer to that is largely is that our investments are driven by the mandate. So as you know, the GPF, for example, has got liabilities on one side, and clearly they do their asset liability modeling. We don't do that. They come to us and say, you shall invest, along, this way. For example, first weeks or whatever, and we take that mandate and we invest, according to that mandate. So it's very difficult, I think, for people who don't know how we work. They think we just like the JSE. Quite honestly, no, because we have got, for example, a huge exposure to NASPAS, which is troubling us, but we have to buy NASPAS because it's a big constituent of the index. So it's a function of the mandate and nothing else.
So meaning that the arguments should be directed to the GEPF, basically, not the PIC.
The PIC is simply the asset manager,
yes.
And not the owner of the money. So I think if there was like an MBs or a getting together between the owners of the money and the asset managers, hopefully at some point there will be a coming together of obviously realizing that there are assets and there are liabilities on one side, And as we all know, it's a defined benefit fund. So, we have to also, invest in assets that will generate adequate returns.
Thank you.
I will give a description of the investment process as it relates to listed investments. It will make reference to certain committees in certain instances. It is suggested that the investment process be read in conjunction with terms of reference applicable to the relevant committees of the PIC, as well as the DOA in as far as it relates to listed investments. The internally managed portfolio is managed via two distinct strategies, namely passive and enhanced beta, where we try to generate a little bit of outperformance from the benchmark. So alpha, people talk about alpha, which is obviously if you are following a benchmark and you can add a little bit more, you are generating, this alpha, this return for the pensioners. The passive strategy replicates the stock weights of the client-mandated benchmark by periodically rebalancing the portfolio. It thus has a very small, what we call tracking error, that is deviation from the benchmark. And we have a quants team, a quantitative team in-house that performs the regular rebalancing of this portfolio. The enhanced beta portfolio is also managed using a client-mandated benchmark. However, the stock weights may differ slightly, clearly within certain risk parameters to the benchmark. The stock tilts or weights in this fund are based on research or on the research process outlined before, and we are going to go into that. There are therefore trades that are made in order to rebalance the fund to reflect the research views of the investment team. However, the tracking error of this fund remains well below that you would find, in a defined or active fund.
In other words, if I can put it in lay terms, if you compare the beta with the alpha, beta will be the second prize.
Exactly. And the reason why we do this really is to, if you come to think of it, we are managing 2 trillion rand. Of that 2 trillion rand, as I said right at the beginning, approximately 80% of it is in the listed space somewhere. We've got probably around a trillion rand parked on the JSE. You have to clearly push a lot of that money into passive strategies to protect the portfolio. Because if markets turn and you are only, pursuing active strategies, it's possible to burn a lot of cash. So we have a sizable number of investment professionals at PIC managing this part of the portfolio, and I'm proud to say it's a good team. Over the last 2 years, particularly, they've performed well in an environment where we've had issues around Steinhoff and so on. For example, when Steinhoff happened, the portfolio was outperforming by over 10%. So it's a team that's delivered what they contracted or were hired to do.
Two questions, Mr. Madhava. Give us a sense of the numbers on sort of the breakdown between passive and the enhanced, the beta.
Sure.
And then, the numbers and the breakdown there. The second question is, I read somewhere in the documents that the PIC would like to increasingly manage more money in-house, meaning that, as you know, about under 10% of your money is managed by, the outside managers. Why is that so, given the fact that the PIC says it wants to boost black managers and, to manage money? So why is 10% managed by outside money, and you still want to decrease that money also?
I think, let me answer the first one first. So if, in round terms, if you say we are managing 80% of the 2 trillion is managed or is in equities, I would say 80% of that 80% is internally managed and 20% is outsourced. And I'll talk about external managers a bit later. Of the 80% that's internally managed, I would say, 80% of that is passive and 20% is in beta strategies. So the beta strategies, in rough terms, we are talking of about 200 billion, in rough terms. So which is a very sizable asset manager, if you come to think of it. And so we just trying to add a little bit of, performance on an otherwise passive. Remember, the clients, particularly the GPF, will just give us a benchmark and say, just bid or invest according to this benchmark. If we outperform it, we don't get paid for it. But we just need to make sure we invest according to that benchmark. So,
yeah. So to be clear, then, is that 200 billion is in smart investment.
Yeah, in smart, and the rest is in
which is how much? 700 billion. Or
well, yeah, in round numbers. I like to talk in 80-20 because it's a moving number.
Oh, okay.
Yeah, in percentages.
Okay.
Yeah.
And then the stuff about the black managers and the
if you don't mind, when I talk about the asset management part, then I'll address this because actually it's not correct. All I can say at this stage is we are moving money that is managed by global asset managers, BlackRock. We are taking some of that money back to the PIC to enable the team, the internal team, to be able to manage global money as well. Because at the moment they're only managing domestic funds. So we are taking some of that to give them the opportunity to manage global funds. And at some stage, just like, I think it's a development of our personnel and also development of the PIC at the end of the day. We have had to go to the client to ask for permission to do that, but I will address that later. I think, what I must point out is in compliance with the Financial Sector Conduct Authority, which is the FSCA, it used to be called the FSB, regulation, investment decisions, including trading, are made only on publicly available information. You can imagine our size. Everybody is always trying to see, do we have the advantage? Do we have inside information on? I can categorically say the team prides itself only on working on publicly available information. Whenever there is instances where information comes to the team that is not publicly available, the stock is immediately embargoed. So if you allow me to just talk a little bit about the investment process for the internally managed portfolio. Basically, we believe that financial markets are inefficient due to behavioral-based biases which cause discrepancies between a company's fundamental value and its market price, which is why clearly people trade shares. People see things that other people don't see, etc. We believe that a strategy of purchasing quality companies at attractive valuations outperforms the market over time. We employ a disciplined framework, the so-called 4-factor process, and I'll go into that a little bit later. focusing on rationale and objective analysis to identify those opportunities and guard against falling victim to all these biases that we are talking about. We believe that the empirical evidence of a quality company is one that generates high returns on its invested equity capital at lower than peer group capital risk. We seek to identify these companies and add them to our portfolio at attractive valuations.
Can I, sorry to interrupt again, is that what normally is called in lay terms, you focus on the blue chip stock?
We indeed focus on blue chip stocks. It's a problem for us though, because we tend to hold everything. So the way we do this is, if the team strongly believes and they've done their work, and we'll see, we call them deep dives and so on, and they see opportunities, we can add a little bit more to that stock and go overweight. In other words, more than what the benchmark allows. So we take those opportunities. Or if we don't like something, we can downweight it and be underweight that stock in the index.
Mr. Madhava, so that strategy, am I right in saying, is called growth at reasonable price?
Yeah, you could say this.
You could say that.
Yes.
And then the second question is, if the bulk of your portfolio is passive strategy, the value add, does it happen only in that 200 billion rand portfolio, the smart portfolio?
Yes.
Because the passive part really is just the numbers.
Passive is just following the benchmark.
Okay,
in fact,
so the bulk of the enhanced value is in that the enhanced beta portion.
That's right.
Okay.
And that's where we've got the professionals, that we have at PIC. That's where they work, yeah.
All right, thank you.
So PIC follows a four-factor approach when analyzing stocks. So let me go through, factor one is a competitive advantage quality or quality. To determine the competitive advantage and quality of the company, we use what we call Porter's 5 forces framework. I think, to explain it, I think, these 5 forces would include threat of new entrants, threat of substitution, bargaining power of buyers, and bargaining power of suppliers, competition amongst firms, etc. So you're looking at a company and saying, where is it placed when you look at all these forces? Is it, has it got, supply power? Is it in a corner? Threat of new entrants in the sector. There are sectors where companies operate. There are very low barriers to entry. Anyone can come in and so you probably want to avoid buying companies like that.
Do I understand? I just want to understand it myself. It is a useful tool to do the analysis.
Exactly. And it's a tool that's I think a lot of people who are in investments would use too and understand quite easily. The second factor is what would cause stewardship or ESG. I think PIC is getting more and more engrossed in this. I think everybody is moving towards ESG and making sure that and ESG means environmental sustainability and governance. And we believe that good corporate governance and adherence to best practice on ESG ultimately leads to sustainable good returns. We use reports and scoring done by our team, ESG team in-house, in our analysis and engagement with the board and management of companies to ensure that best practices are adhered to. I think the difference between the PIC and, say, other global asset managers is other global asset managers would avoid buying companies that pollute, companies that are laggards in ESG. We would do the opposite. We would buy those companies and invite them to the PIC, sit at the table, and try to change their behavior.
Do I see a strong influence of King 4?
100%, yes.
Yeah. A question on this factor is that it looks like the PIC has been struggling to make the companies compliant, especially listed companies. But I've seen in the documents also that even the unlisted companies that you guys have invested in are struggling, you know. Is that correct, first thing? And especially in terms of corporate governance, you know, Steinhoff, these flags were there before probably, but they were not acted on maybe speedily. So can you just explain a bit about sort of the success of this concept?
I think, look, we've come a long way in our ESG engagement. We've got a significantly bigger team now, and our engagements are starting to bear fruit. We do engage extensively, but you have to understand, PIC, we are never the majority owner in most of these companies. We happen to be a significant shareholder. So there are times when we go flex our muscle, and we are not always successful, but it's registered. So there are times when we have been successful. I think the Steinhoff issue is unfortunate in the sense that we fought for a long time against the Frankfurt or the German listing. It was not, you know, we were not supporters of that. Unfortunately, we were not sizable enough to block that. But I think the JSE has been engaging lately with a lot of shareholders, including ourselves, for what they can do to make changes. There is also the issue around auditor rotation on the board, because the auditors, as you know, for Steinhoff were there for a long time, etc. And so there are a lot of issues that have been in discussion. We are on top of that. You know, all I can say is it's work in progress, but we've had some good engagements.
Yeah, the one concern is that the companies in the unlisted space, especially, some have not been performing, but one doesn't see any sanctions, any penalties built in within contracts and shareholder contracts. So I'm not sure that if these businesses do not comply, especially given the commitments they made to the PIC, what kind of sanctions and penalties can the PIC impose on those companies?
Well, I would not like to speak for my unlisted colleagues, but
Yes.
but
Speak for the listed. Sorry.
But I think for our you know area, I think we've been very active. We've put people, well, not put people, but nominated people who obviously, being cognizant, these are listed companies, people who go to these boards, influence the governance, etc. It takes time, but I think we are already seeing some very good things. Recently, we increased our stake in MTN, and we are quite active there. We want to see change, because you know this is a company that's been found wanting in a lot of countries. In Nigeria, you know, they are operating in the Middle East, etc. So we want to have people there who are going to represent us and make sure that the governance and so on improves.
Okay, thank you.
You've mentioned Steinhoff a number of times, and I'm assuming that that will be something forthcoming in due course, Advocate Dibba. But if you've mentioned them in your presentation so far, perhaps you could just explain how big the investment was in Steinhoff and how material, obviously in total, it's always percentages given the size of you is not material necessarily, but it's very material. If you've got these misgivings, what did you do about it with that size investment?
Can I note your question, but I will answer it shortly because I just need to highlight one point. Just further on in my presentation, then I'll answer your question.
And I'm assuming that this is not the Steinhoff investigation. This is simply arisen because you have raised it, that is a subsequent matter for the Commission's attention.
No, sure, but I'll answer that too. Then the other factors are uncertainty and risk. And
there's something else that my colleague wants to find out.
Oh, sorry.
The final stuff, our topic on the corporate governance, and all that, is that, if you look at boards and senior management on GAC companies, these things, boards have changed, but management hasn't changed much in some sectors. Just before we leave the point, I just want to ask, is the PIC going to be very serious about these things?
Well, I think
environmental, corporate governance, all those things.
I think
is that taken very seriously, and in the future, is that going to be taken seriously, this issue?
I can really categorically say PIC is taking ESG very seriously. The team has grown. We have recently, been talking. I think you probably know Robeco Sam in Switzerland. They are specialists on ESG. We would like to introduce an ESG element more and more into our South African portfolio. We already have it in the global portfolio. So I think I can assure you that the PIC is very serious on ESG. Obviously, it's a work in progress. It's a big portfolio. We are never a majority owner in all these companies. So we can shout. But if we are outvoted by the others, it will take time for us to, it's much easier for the investments that we make in the rest of Africa, because there, for every investment that we make, we put our people on the board. We don't trade. It's a buy and hold strategy. We don't trade that portfolio. So it's much easier to police corporate governance and so on. It's much more difficult in South Africa because we can't put PIC people on these boards because of FSP or FSCA regulations. So, but I can assure you that it's something that the PIC is investing heavily in.
Perhaps just a follow-up in a way. You've mentioned a number of times you are not really able to do something because you're not the majority shareholder, but in your decision-making in going into a company, I'm assuming that you invest to a point of being a significant shareholder. You don't have to be a majority. It's certainly enough noise when you're a significant shareholder to have a lot of weight. To what degree are you looking at only a majority shareholder making certain decisions? Because, if you've got a PIC investment that is a significant shareholder, you've got a lot of voice without being a majority?
Yeah, maybe I should correct myself there. When we say majority, I think the proper phrase is shareholder of reference. So if for example, MTN, when we are close to 26%, we are now a shareholder of reference. So to me, that is important, because whenever they do things, they do these things with the understanding that PIC as an investor, we are represented on the board, and and our policing of governance then becomes much easier. So I think I was referring to some of the smaller, because we've had issues in some of the smaller companies, Group 5 and so on, where we are a shareholder, but we are not a shareholder of reference. And there are other shareholders like Alan Gray and so on, who may be a lot bigger than us. So they, we are not always pulling or seeing eye to eye with some of these guys. So it becomes a little bit more contentious and difficult. If you allow me to continue, factor 4 is valuation, and here our key assumption is that the fundamental or fair value of any stock is discoverable. In other words, you can look at using different tools to see what is fair value. And in most cases, we use what we call the discounted cash flow method, where you look at cash flows and you discount them to today and see what the value is. We also use supporting tools that price to earnings, internal rate of return, price to NAV or net asset value, etc. And the team is always working around these valuation methodologies and perfecting them and so on. Obviously, depending on the sector, in mining, for example, the discounted cash flow is used more, and in banks it may be price to book or something like that. It varies, but we have a team that is very well schooled and looking at these things on a daily basis. Then we have discussion or information forums that aid the portfolio management process on an ongoing basis. We have morning meetings where people discuss recent economic data releases, and we can flag what is changing. We've got, and we pride ourselves in the next one, the deep dive meetings, where the team do detailed bottom-up analysis of the various stocks, and then they present to the team, and people have a very animated discussion on the findings, and this really helps us in understanding and making the right investment decisions. Then we've got sector focus meetings, portfolio manager meetings, and these are all meetings that help us to understand better the investment universe.
Question?
Yeah.
Can you give us a sense of how big your team is, and how is it broken down, whether it's economic research or mining team and all those numbers?
So I think now in internal equities only, we've got, so the whole team is probably around 40, just under 40, or around 40 individuals. And we've got, in the internal equities team, we've probably got about 17, 18 people. And they are broken down in, we've got a mining team, mining and oil and gas. And then we've got financials, which will be looking at banks and insurers. Then we've got, when industrials is broken down into two, which is a non-consumer and consumer industrials. So there are two teams there. And then we've got listed property team. I think that's it. So these are people who would get allocated cash, so that the portfolio managers, they can manage and see how they perform, and then what the client sees is a one one portfolio, which is the internal portfolio. So all these sub-portfolios feed into one portfolio, which we then report to the client.
Can I just, for clarity, ask, is this team also working with the team of Mr. Delamo, testified about his research team?
Yes, so we get all the economic input from Mr. Dolamo's team, and in fact the economics team sits in his team. So as you know, the assumptions on growth, on currency and so on are quite integral to our valuation process.
Yeah. The valuation of stuff like IO technology, Steinhoff and all that would come from your team.
That's right. So the valuation, let's take IO. You know, the valuation is an IPO that comes in. The valuation was done in the team, and then we would look at the PLS or the pre-listing statement. There are numbers there, and if we think that you know, and remember, we are not a short-term investor. We are a long-term investor, and we tend to look at returns over a minimum of 2-3 years, you know, and beyond. So if we feel that we are not going to get a return over a period like that, we are not going to invest. If we look at the investment case and what the company is saying they are going to do, you know, then we are not going to invest. And so the valuation is done in the team, yes. So, you know, and then of course the last component of the process is the investment view maintenance, and I think that you know, we'd like to see if things change, etc. You know, and the team is following information flows and keep testing whether or not view generation assumptions still hold, and if things change, clearly we need to tilt the portfolio. Corporate actions, IPOs, rights issues, and book builds. These are transactions that require PMC or relevant governance approval, you know, and however, depending on the DOA, some of these may be quite small, and they could be within the DOA of the CEO of the PIC. But most IPOs go through the PMC. And there are also disposals or sales above certain amounts that may require PMC or relevant governance committee approval. So the next section on deal origination, etc., is quite similar to what you heard yesterday from. Question.
I just want to deal with the IPOs and the rights issues and the book builds.
Mm-hmm.
Can you just explain the process in terms of how you are approached, who typically approaches you, you know, how the process works for an IPO, say, or a rights issue, or a book build, and just explain them a bit for the commission.
That's the next paragraph. So, you know, so we would receive, you know, IPOs would come through a number of avenues. Certainly, most people would feel free to have meetings with, say, the CEO. They would go to the CEO, and or they would come straight to the team. I think we've an IPO, that possible IPO in this current year, where all banks would come in. You know, the likes of Standard Bank, so would come in and say, we are working to IPO this company, and this is the timetable, etc., etc. So that's IPOs. Book builds, that is typically, or rights issues, that's directly from the company or from their advising bank. So they would typically call you with a few hours to go. You know, it's 3 o'clock, the market closes at 5, and they typically call you and say, can we take you over the wall we are going to raise so much, etc., etc. So we have a very, very narrow window, between 3 o'clock and 5 o'clock, we must make our minds to subscribe. However, for book bills and rights issues, it's not a big problem because we already hold the stock. So the portfolio manager must just, make up a mind to say, do I like to add more? Or if they like, they can subscribe. Then we can go and inform, PMC, at a later, to notify them. Actually, it's a notification because we already hold the stock. The approval comes in terms of IPOs because it's a new listing, and we must involve other teams, and I'll go through the process now. But roughly that's what it is.
And typically with this kind of transactions, you pay fees to people promoting them, isn't it? Like book bills and all that. Do you pay fees to stockbroking firms, to the investment banks and all that?
No, for book bills and rights issues, it would just be the broker. Remember, we simply, or in fact, if at all, they are very small fees. We don't. Because the bank is acting not for us. The bank is acting for the company. They are just phoning and facilitating. We don't have to pay them.
Yeah. Okay, all right.
Can I also just clear this up and compare it again to the unlisted part of the evidence, where in the unlisted part, the unsolicited applications are the majority, the walk-in clients.
Yeah.
Not so in the listed division. That's the minority.
Yeah, that's the minority. How many IPOs happen on the JSE? Very few. So, maybe we have 2 IPOs a year or whatever. So, it's by far the minority. The majority of what we involve ourselves in is book bills, rights issues, etc.
And IPOs.
And IPOs, but the IPOs, they happen, you may have a few in a year. Yeah, but people, depending on the environment, they come and want to raise more and more money,
Before we close this deal origination funding application, can you tell the Commission how that the AO deal entered the PIC space?
So the IO transaction, as far as I know, I think came through the CEO's office. Would typically contact the team to say there's this opportunity. I then asked the team, the portfolio manager of the team, to set up the meeting with the company, and the meeting, the kick-off meeting, and that's how it started. And the team then obviously worked to develop the investment reports and so on and so on. And what would then happen is, as you see, is the first PMC, and then you do a scoping report, first PMC. PMC gives you a go-ahead. You do a second. You do a proper, appraisal report, and you invite other teams now. Legal risk, ESG, as per what you heard yesterday from the unlisted team, and then you go to a second PMC, which will then say, yes, we like the investment, or we don't. That's the process.
The final question on this section. So book bills and these rights issues, typically they would be done by the largest brokers, isn't it? Like, say, Merrill Lynch, the UBSs and all that?
What we've seen, actually, you are right, but what we've seen now is, because PIC is a very big supporter of small stockbrokers, and I'll talk to that a little bit. And what we've seen is when the big banks do some of these things, they like to tag with black stockbrokers. So you may have You may have UBS with NOAA or whatever, So that to me is seems to be working well.
Mr. Commissioner, is that a convenient time to have a 15-minute tea break?
approval to go to due diligence. This report is normally submitted to the executive head, for review and approval to submit to PMC listed via the company secretariat. PMC listed will then consider the submission and either approve or decline, which is, in this case is very similar to what you had on the unlisted. And there may be a discussion to say, the investment case is not strong enough, or at that stage we also obviously want to know who is behind the listing, which sector. Sholto's team, Sholto Dolamos Research and Development team would also come in to say that is an attractive sector. I think if I give you an example there, I think Vivo came to list which is an oil trading company, came to list, but they were listing in the retail sector of the market, and the valuation was quite toppy, quite expensive, and we didn't feel that we wanted to be part of that at the onset. So there will be IPOs that come in and they can be also rejected for a number of reasons. If we receive approval from PMC listed, the investment team will then request the various executive heads from risk, legal, ESG, for resources to assist in the DD process of the proposed transaction. Depending on whether the investment team or ESG has internal capacity to do that, it may be, but in the listed environment, it's very rare that we go out to get help to outsource this DD. This DD is normally done internally.
Question. So this deal scoping, does it apply, to IPOs and book builds, or just normal transactions, when you're buying Naspers or SA breweries?
No, it would only apply to IPOs and not book builds or rights, because remember, book builds or rights issues happen on stocks that you already hold. We have already discussed the deep dive and all this, the maintenance process, the morning meeting. So the team is already in love with the stock or out of love with it. So by the time the book build comes, they will either want to take more or they want to downsize. So what I'm talking about here applies only to IPOs. So as I said, the outsourcing part of it is to the listed side is not something that, but if we need to, particularly if we are doing investments in the rest of Africa, we don't just rely on numbers. We want people on the ground to tell us, what is happening in the company. People often joke to say, if you are buying a company in Nigeria, the guy with the biggest boat, you don't want to be buying that company, etc. So we may want to hire somebody to help us with that. So, you would see that the normal process, procurement process, will then be followed to do that. The approval of the recommended service provider will be done in line with the DOA, obviously, and the engagement for that person or company must be reviewed by legal and signed in line with the DOA.
Question?
Yeah.
The procurement process for DDs and the other areas, is it done by finance or is it done within the divisions?
It's within the division, but procurement falls under finance. So we work in conjunction with them.
So it will be a joint effort. Okay. Thank you.
Is it the normal supply chain management process in terms of the PFMA?
That's right. And when we talk of DD here, we're talking really of what I talked about earlier in terms of valuation, so we'd look at everything from commercial, financial, technical, if it's a mining deal, to come up with a valuation. To us, valuation is key because unlike unlisted investments, these things are going to list on a terminal market. The risk is a lot less than in unlisted transactions. So to us, we just need to make sure that we are comfortable with the valuation. On listing, the market will determine that price. And if we are correct in our valuation, then from day one we may be in the money or so. But so when you see some of these aspects of DD, I think we want to emphasize to here that that valuation is. Then obviously we then look at other aspects: legal, regulatory, ESG, etc. Are the directors of sequestrated? For example, there was a company that was listing on the GSE and was not clear because some of the guys had been sequestrated before. It was not clear whether they've been cleared. We also nowadays look at PEPs, or politically exposed individual, who is behind the transaction. Given the noise at the PIC, we want to make sure that we have really thoroughly researched who we are dealing with.
Yeah, question. I just wanted to check whether Advocate Lube, about the IO valuation. I wanted to ask some questions, or is that something we can deal with later as we go along?
Well, we can. I can,
You can
partly answer that now.
Okay.
That
because you are here, so I thought
I can answer that now.
Can we? Can I just ask? I've read that valuation. If you could just take us through the process, how it was done, how it was justified, as the head of that division.
So the way the team works is that the deal comes, it comes into the team, the GM will allocate, remember I described how the teams are structured. It will go to the team responsible, for that sector. And the portfolio manager will then, allocate the job to somebody else. It's not anybody's, we don't interfere with the valuation to say value it like this or whatever it is. The portfolio manager and the team will come up with a value. For example, I can tell you that in the case of, for example, Sagamata, our value that we came up with was so far away from the PLS valuation that it was always going to be a very contentious, thing to have invested. In the case of IO, I think there were a number of assumptions there. Remember they were going to invest in the British Telecom stake, and there were also assumptions in terms of the various platforms, that they had. The incremental value add in terms of BE, and I think some of that has come through with the contract that they got with Sasso, etc. So what I saw, there was that the valuation, the assumptions, remembering that we're not short-term investors, we're longer-term investors, we're typically looking 2-3 years out. We felt that we could invest, provided that there were a number of mitigants, in the possible volatility, and volatility would come in a number of ways. One is that there was very little liquidity in the stock, so people can manipulate that stock quite easily. But the bottom line is that we felt, and the team felt, that we could invest, and we did invest.
Was there a lot of debate in the team about that valuation?
Not that I'm aware of. I think a lot of, this process that I described, the work started in earnest at the beginning of December, culminating in the subscription and, listing, I think around the 20, whatever the date was. But as I said earlier on, I was out of the country. I only saw these reports after I came back. So whether there was a debate or no, maybe there was a debate, but I wasn't part of it.
Would you say the valuation was at the top end of valuations?
I'm sorry to intervene. I don't want to be rude, Mr. Commissioner. But in all fairness to the witness, and I think you opened this commission to say we want a fair process, and I understand the merits of the questions, but the witness is welcome to answer it. What I'm just trying to put on record is that he has not prepared to come here today to discuss the AO investment. He's coming here to give formal, generic evidence on the listed investment. The forensic team of the Commission is busy with an in-depth, and they 80% finished, with the forensic investigation in AO. And we hope to answer all the questions that is now asked. But if Mr.
No, thanks.
Madhava is comfortable to answer it, it's fine. I just want to put on record that I don't think he has come here prepared to answer the AO questions.
No, thanks. It's why I actually, asked whether he'll be, he's prepared to answer. But if it's too much, it's fine. I'm happy to drop it.
Sure.
Yeah.
Thank you. So following the DD and the investment team will then prepare what we call an appraisal report, recommending, as I said, either to invest in this or not, and this appraisal report will be accompanied by independent, and therefore I must stress, independent reports from ESG, risk and legal, and from there on, I think it's very similar to what we had yesterday in terms of process of submission of the documents.
Can I assist you, Mr. Commissioner? Mr. Madhava, we discussed this paragraph 31 to 40.
Yeah.
The process is similar to the...
Yeah, very similar in terms of how you handle the documentation and so. So if we go to 41, if the transaction follows within PMC listed as DOA, PMC listed will then do the following. They approve, the company secretariat prepares the resolution for sign-off by the chair, and as I say, is usually the CEO or the acting CEO. In the PIC, it's the two executive directors. The team prepares an appraisal letter for submission to the potential client to inform them of the outcome. As I said at the onset, there are subtle differences, or indeed differences in the process followed for book builds, rights issues, and this is really due to the real-time nature of listed markets. For most of these, the investment team, as I said, they already own the stock, will execute in line with the prevailing DOA and thereafter notify PMC as per the DOA. And I think it's important to stress that we hold this, the stock already. So we already have an opinion on what we should do. At this point, I just want to highlight because in the market, when transactions are done on the listed portfolio, and examples are Steinhoff and so on, people always look at the listed team to say, they are doing, these transactions. In the PIC, there's a team called the Structured Investment Products Team, SIPS, which sits in the private equity arm of PIC. And transactions may be executed by this SIPS team using listed investments. Usually it's done to facilitate BE funding. I think an example would be where we have a significant overweight or significant underweight to the benchmark, and if we have a significant overweight, we then can do one or two things. We can just sell the stock into the market, or we can facilitate BE. In other words, create an SPV, fund the SPV to buy the shares of the PIC,
Question. Steinhoff was part of the SIPS process, I gather. What
True.
other transactions maybe could you point out? that
So
were part of SIPS?
I think it's a Steinhoff Vodacom transaction. When we negotiated the purchase of Vodacom shares from National Treasury, clearly, that had to be done by another team because the negotiations themselves took long, and we have to have very strong Chinese walls between the private equity team and the listed team in order to protect the listed portfolio, because as I said earlier on, we can't trade on inside information. So those are two examples that I can.
So the Vodacom one was just a straight purchase of the shares, isn't it?
Yeah, but there was a second leg to it, which was BE. I don't believe it's been done yet, so it is still to come.
Okay, thank you.
Can you just for the record tell the Commission what is an SPV?
Well, it's a vehicle, special purpose vehicle, which would hold, which would then have the B parties would be, I guess, owners of that SPV, and they get funding to purchase the shares of the listed company. They obviously, eventually they will become owners, rightful owners of that stock. At this point, I just really want to move, well, I think before I leave, I just want to say, it is important to mention that there is very strict Chinese walls between the unlisted team and the transactions that they do at PIC and the listed team. And we do that, A, to protect the fact that never at any one point should non-public information flow to the other side. In other words, the listed team must not know what the unlisted team are working on. I think it's very common in investment banks and so on, and other places, and we exercise that rigorously. Yeah, and the Chinese walls are also between the team that runs the external management funds and the internal team, because the internal team must not know the positions that outside fund managers are holding, so that those things are maintained. So I just want to talk on the externally managed funds.
Before you do that, that what you refer to as a Chinese wall can actually also be called an integrity wall.
Yeah.
Okay.
Yeah, sure.
As a follow-up on that then, is that when the external managers come to report to the PIC, who do they report to?
So they report to the external management team, the one that I'm going to talk to next. Yes. And there's no contamination. They don't meet the internal equities team at all. Okay. The internal equities team, in fact, the external management team, they sit well away from this other team. They are on the other side of the building.
And both teams then report to you?
Yes.
So you are the only person who knows what's happening around those two teams.
100%, yeah.
Okay, thank you.
So the externally managed funds division, as you recall, I said, you know, the overall portfolio is 80% is managed in-house and 20% is outsourced. And it's this 20% that is outsourced that we're talking about. The external management funds division is a dual mandate within the PIC. So one is alpha generation, is the satellite portion of the client investments. And I think more importantly, they also play a transformational role within the South African investment management industry. And the team aims to construct solutions on behalf of clients that constantly add alpha, that is, returns in excess of the benchmark over the long term, in line with the client expectations, through what I would characterize as robust portfolio construction processes, while being aware of the risk tolerance. The team aims to contribute to the broader social and economic development of South Africa through allocation of capital to black-owned asset management firms, supporting black-owned stockbrokers and increasing participation of black individuals within the industry. To date, we've allocated just over 100 billion of funds to BE managers, which is something that the PIC actually should talk more of. To achieve these objectives, a diligent investment process is followed. The investment process aims to create outcomes that deliver on all phases of the market cycle by utilizing diversified investment strategies. In other words, deep value, growth, and so on. And working with external investment managers who individually represent the best skill set in their respective areas of specialization. The externally managed funds investment process consists of three key areas: external manager selection, portfolio construction, and monitoring, each with a clear investment process. The external manager selection process provides the framework for governing the selection of managers and initiates the process of capital allocation. It starts with the external investment manager identification, followed by DD, due diligence, which incorporates, again, with pulling in the other teams, ESG, risk, legal, at the initial and final evaluation stages, with recommendations by these divisions to the relevant governing committees. Identification is the process of shortlisting external investment managers who meet technical criteria set by the team. The process is done through a request for proposals, RFP, or a screening process is done by the external management fund team. Prospective external investment managers who meet PIC minimum requirements are requested to complete a DD questionnaire, which highlights the details of their firm as it relates to the organization and its people, investment philosophy, process, resources within the business, risk management, and portfolio construction, etc. The response to this DD questionnaire, the responses are scored by a technical evaluation team, and prospective external investment managers with a score above a threshold are notified accordingly. This is that an on-site DD to verify some of these things will follow. The team that performs that will comprise members of obviously the team itself, ESG, risk, etc., supported by legal, procurement, and internal audit. So it's important to note that. The on-site PIC DD is undertaken to evaluate and validate the information obtained from this questionnaire. And the on-site DD is followed by another round of scoring. Prospective external investment managers with a score above required threshold are placed on the approved database of external investment managers. Further quantitative analysis, including portfolio construction, is performed by the team before a recommendation of allocation is made to PMC listed. Submissions are also made at this stage to that committee by the other teams, ESG, risk and legal and so on. If required by the DOA, approval will be sought from a higher committee, IC, and obviously PMC will then submit to IC for that approval. Upon receipt of the relevant governance committee approval, prospective external investment managers who are recommended to be allocated funds will receive notification letters from the PIC, and contracting will then begin, facilitated by the legal division. From there, we do manager monitoring and retention process.
Quick question, 2 questions. So one would assume that when you hire these managers, as you said, some would be value, some would be growth. So do you take a number within any particular style like value and all that, or do you just take one or a number of them within each style is the first question. The second question is, just give us a sense of the RFP process. How often does it happen? And secondly is that, do you, once you have approved the manager, do you give them regular money? So you start giving some money, and do you give them regular assets to manage over a period of time? So
obviously one is aiming to have an optimum mix of managers, so that, as you know, if a deep value is under stress, you don't want to have a big weight towards value alone. You want to have an optimum mix, value and growth and so on. So the team will do that work, portfolio construction, etc., to see what is the optimum number of managers they have to have in each star to make the overall mix a good balance. So that work is constantly being done. The times where you see you're underweight value, you want to add more to it, etc., etc. So, so that's the answer to that question. In terms of the RFP, we try to put out the RFP. It's a lot of work, as you can imagine. We must publish it in the newspapers. We must give people, everyone, an opportunity to apply into this thing. The last one we did was, almost a year and a half, coming 2 years. We are busy preparing one now, and should be coming out in the next few months. And I've forgotten the third question.
Giving the first money to manage, do you then give managers more money to manage? How often does that happen?
So again, I suppose you are talking of incubation managers. We have this incubation program where people who may have been asset managers at different asset managers come together, and we give them money. If the performance is good, etc., we do top-ups on maybe after 1 year we do a top-up, remembering that if they are incubation managers, they get paid a higher fee because they start with lower numbers. We typically start on 800 million rand, and we give them a higher fee, and then add on to that. So it's done on merit. In other words, they have to show that they are performing.
But the normal ones, you give them money once. You don't top up in time, the mature ones.
No, the mature ones, we also do the regular top-ups, and again, it's driven by performance, first of all, but also, we need to have an optimum mix. We can't just give a lot of top-ups to growth, and we need to make sure that whatever we do at the end of the day, we have an optimum mix of managers in the solution.
Thanks.
So, we're talking of manager monitoring. I think here, it's quarterly report backs and the interaction with the team. The team will visit on site to make sure that what we contracted to is being respected. Then I think what I just want to talk about again here is number 61, which is course of action as a result of irregularities and underperformance. There you've got issues where some managers may change the teams, people leave, there have been disputes in terms of ownership, in some cases, and bearing in mind that an asset manager is only as good as the people who work in it. So, where you lose people, you may have to call the manager in, tell them to bulk up, give them time, etc. And there are also times when the manager continues to underperform. However, you can't say if value is under stress and value managers are underperforming, you have to be cognizant of that. You can't just fire them, because they are underperforming. You have to be patient. So we tend to look at underperformance over a longer period of time, typically 2-3 years. So depending on the significance of an event, the team can choose one or 4 possible courses of action. Take no action and continue to monitor the manager. Recommend placement of the external manager on a probationary status known as the watch list. Conduct a comprehensive study known as an in-depth review of the manager, or you can recommend, and this is really the final straw, you can recommend that we part company with that manager. It's happened in the past, but we try to avoid that one.
Question. Give us a sense of terminations or withdrawing money or sort of reducing funds over time. How often does it happen that you literally have to terminate the manager? Just a sense of numbers. It's not a regular occurrence. It's quite rare. As you know, it's the final course of action. You try to intervene. You try to work with the manager. The only thing you can't do with any manager is to tell them what to buy or sell. But you try to reduce, the tracking error, deviation from. You try to make sure that they've got the right people and so on. What you tend to see in most cases is that people take the eye off the ball. They're not bulked up enough. As I said, in any asset management company is as good as the people you've got in it. And when you do an attribution analysis to see where the problem is, it's often that the people are not paying attention. So, I think the short answer to your question is yes, it's happened. We've had, unfortunately and reluctantly, to take money from some black asset managers, but it's a very rare occurrence. Thank you.
Then I think the last section I will cover, I will go to fixed income, which is the fixed income division of the PIC manages the majority of bonds and money market instruments in-house. I think as of the 31st of March, that team had 692 billion almost, or exposure of 692 billion, allocated as follows: 69% to government bonds, 26% to SOEs, and 5% to corporates. I think that's the number that we've got here. So it's quite a big team. Here the process is that potential issuers arrange a meeting with the general manager of the team and or the executive head of the division to inform the Public Investment Corporation of a new proposed fixed income instrument to be issued. At the meeting, the PIC is informed by the lead arranger or issuer of the details of the issuer or guarantor, as well as things like tenure, coupon rate, and characteristics of the proposed bond issuance, etc. Those things are discussed there. The fixed income team then will do a scoping report or a desktop analysis to ensure the bond complies with the minimum client mandate requirements and check the credit rating of the issuer as well. If the bond and issuer passes these checks, the fixed income team present the potential transaction to the PMC or listed to request a DD, for due diligence. The due diligence is undertaken very similar to the equity side of the business, where you include, the only difference here on this side is we've got a credit team that then goes and checks, does a credit report. That's the only addition, but it's very similar to what I've already articulated. And once these reports are in, we go back to PMC, very similar to what you do on the other side, and the process is, is similar there. On number 70, once such approval is granted, the fixed income team will look at the different bond mandates and portfolios in order to determine if the proposed allocation. The fixed income team then participates in the primary auction or book build, as we'll call it. If, obviously, SOEs and all other things, they do all these auctions that they do on a, if the outcome is successful and the allocation of bonds is received, details such as allocation, static data, international securities identification number or ISIN, maturity date, yield, etc., is obtained from the book runner or the counterparty. The transaction is then booked to the relevant portfolios, matched with counterparty, and settled on the settlement date.
Can I, sorry to interrupt, can you just explain to the Commission what is exactly meant by primary auction book build? It's technical terms, if you can just explain.
Yeah, no, I think it's, it will be very similar to the equity side, where people are raising money, essentially. So Sunrail or ESCOM would come to the market auction looking for money. And in many cases, particularly in recent months, or where there have been issues in terms of corporate governance and so on, a lot of private money is shied away from it. So PIC ends up, being a major participant in some of these auctions.
A question. Within the external managers, do you have people managing bond funds, fixed income funds?
Yes, we just actually appointed our first fixed income bond managers in the domestic market. We have three managers. One established and two that I would say are developmental managers, but they're all black owned. Obviously, after this, the fixed income team continuously manages and monitors the portfolio, and I think I'll end up there, Chair.
I just wanna to follow up on one of the first questions which I asked, that, and you said you would look at it. So is the PIC thinking of decreasing the money to external managers over time, or is it looking at increasing the money to external managers over time?
No, I think the idea is to keep increasing. What we are doing now is, if you look at the ratio, just to give you highlights, I think if you look at when we started this program at the PIC in April 2009, roughly 83% of the outsourced funds were in non-BE money with non-BE managers, and only 17% was in BE hands. As of March 2018, that ratio has tilted quite sharply. 60% of funds is now in the hands of BE, and 40% is non-BE. So, you know, we, as I said, you know, there is 170 billion outsourced currently, and 60% of that is in with black managers. The idea really is to reduce allocation to non or to traditional managers, and to keep increasing allocation to black-owned fund managers. And the definition here is 50+1, and you know, a significant element of women and so on in those companies, as well as management control.
Thank you.
Mr. Commissioner, members, that concludes the evidence. Mr. Madhava.
Can I just ask one question? As head of the, head of listed investments, executive head of listed investments, are you satisfied with processes that are followed, for instance, up to the decision whether or not to participate? Or would you say that there needs to be some changes brought in order to speed up matters and so on? Or are you satisfied with the processes as they are?
I think I would answer it this way. We have improved our processes, particularly over the last 2-3 years. Despite the challenges of time to market and so on, even in IPOs, you have challenges in that people come 1 month or so prior to IPO and they want PIC to participate. And we have had instances where we've sent them away to say, look, we've processed, we have a 2-stage process and we need to do a DD, proper DD. So I'm satisfied that really I think we've improved on our processes. We incorporate other teams in what we do. And I think, there are challenges in terms of, particularly on the book builds and rights issues, but there the risk is very low because we already own the stock. The IPOs is where, there can be challenges, but for as long as you say to the prospective investors, if you say to them, look, you want the PIC to participate, we have processes. If you don't want our processes, then we can come on board after you have IPO'd. I think that we have said that. So am I satisfied? I think I'm very satisfied with the changes that we've implemented over time at the PIC.
Thank you.
Chair, can I, may, if you leave, just follow up on that? Thank you. You reminded me of something I forgot to ask.
The one question, Mr. Madhava.
You've seen the terms of reference of this commission. One of the terms is that whether there's any alleged impropriety regarding investment decisions by the PIC in the Remedia reports in 2017 and 18. You know, AO is one of those. To your knowledge, do you know of any impropriety regarding investments made and reported in the media 2017-18?
Absolutely not. And I think I'm proud to say, even if there are seen to be failings in what we did in IO, I don't think there will be any tinge of impropriety that will be found. Certainly, not that I'm aware of.
And do you know whether any director or employee used his or her position or privileges or confidential information for personal gain or to improperly benefit another person?
No, I'm not aware of anyone.
Thank you, Chair.
There's a question. In point 5, you mentioned dealing. It's I think it's a large part in general. Maybe for the record, take us through the broad, part of it in terms of the RFP process, how often it is, and which brokers are being used.
So I think it's important, and a lot of people don't realize this. I'm always having to explain this part to people. So remember I said we manage a large portion of the portfolio on a passive basis, which means we don't chain the portfolio. In other words, we don't trade the portfolio that much. So despite the fact that we manage a lot of money, we don't generate lots of brokerage. However, some time ago, we decided that we wanted to transform the stockbroking industry. We interviewed all the 52, I think, this market has got a lot of brokers, 52 brokers, and we decided, and the aim there was to say, those that we classify as BE brokers, we group them on one side, and we try to allocate as much of our brokerage to that group as possible. That has been going on, and the idea there is to make sure that they grow, they hire new people, they've got a regular source of income, etc., etc. It's not always, possible to satisfy everybody because, as I say, we don't generate enough. But we try to make sure that, those brokers, are the best on our list of allocation. I think over 80% of what we now give is to this group. And then the rest is to obviously the bigger global banks, because we still, and local banks as well, Standard Bank, etc., because we still need global research. But that program of supporting of stockbrokers has worked very well. And the second leg in that support scheme is that the money that we've allocated to external managers, at least 40% minimum of their trades must go through BE stockbrokers. And we police that as well. So on report backs, when they come in, we make sure that they are compliant.
Thanks.
Thank you. Sorry.
The RFP process, how often does it happen? The RFP process for the brokers?
No, I think the brokers we don't do another because we saw them right at the beginning. So if for example a black group goes to buy a black stockbroking firm, Concilium, Navigate, all those are good examples. They can just come and present themselves to us, show us that they are compliant, and we'll take them on our list.
Thank you.
Mr. Commissioner, that concludes the evidence. The next witness is ready to proceed, but because of what happened this morning, I estimate about 10 minutes just to discuss certain issues with the next witness. I would not ask for an adjournment. I don't want to waste time before lunch. If I can ask you if we can start at 12:30, and then I can use the rest of the half hour before lunch with this witness.
All right, so up to 12:30, but you'll let us know when you're ready.
Thank you, Mr.
Thank you. We will adjourn from now until we are advised when to come back.
My apology, Mr. Commissioner, it took a bit longer. But Mr. Polwane is ready, and he will take the oath now.
Your full names, please.
I am Christopher Pulwani.
Do you have any objection to taking the prescribed oath?
I don't have any objections,
That being
Commissioner.
so, do you swear that the evidence you're about to give will be the truth, the whole truth, and nothing but the truth? Raise your right hand and say, "So help me God."
So help me God.
Thank you.
Thank you, Mr. Commissioner. Members, can we have the same arrangement that I can also be seated? Mr. Pulwane, you are the executive head of human resources at the PIC, is that correct?
That is correct,
And
Commissioner.
you've appointed to that position on the 1st of June 2014.
That is correct.
Can you just state to the Commission what other positions you held since 2014?
Commissioner, I was appointed on the 1st of June as a General Manager in Human Resources at PIC up to the 1st of April 2015. Subsequently, there was a restructuring and a new operating model. I then was appointed as the Executive Head of Human Resources from the 1st of April 2015 to date. Those are the positions that I've held so far within the PIC.
Thank you. You have prepared a written statement with annexes for presentation in your evidence before the Commission.
That is correct, yes, I have.
Before we start with that, Mr. Pulwane, I want to ask you about the board meeting of yesterday. I believe you were invited to a board meeting.
That is correct.
When were you invited?
I saw the invite sometime last week, can't recall whether it was Thursday or Friday, which then came from the company secretariat that I was requested to be present in the board meeting scheduled for the 21st of January in and around 4 o'clock in the afternoon.
Did you attend the meeting?
I went into the meeting at around 4 and I was excused myself, as at that time it was only board members. They indicated that I should wait until I am requested to attend.
When were you called in?
Excuse me?
When? At what time were you called in?
Are you referring to the commencement or at the time where they called me in to join in the board meeting?
To join the board meeting. Well, after you recused yourself, you went back in.
So I went back in the early hours of this morning, around about 1:30, thereabout, between 1:30 and 2 a.m.
Can you briefly tell the Commission what happened then?
Commissioner, I was asked to respond to a set of questions in relation to the disciplinary charges are affecting an employee of PIC, which I think will be a subject of my submission today. They asked my view as a head of HR, and in my capacity as head of HR of PIC, what I thought of the charges, and if whether the charges were warranted, and the process that was followed, and I had shared that with the board. They also asked me around the mutual separation agreement with a member of the executive team at the time, who we had entered sometime last year, of what I thought around its validity and credibility, and I also responded to that effect. I was also asked around a current disciplinary hearing that is in progress, which is also an aspect that I'll be dealing with.
All right, to make it easy and to sum it up.
Can I just request that you speak up a bit?
Thank you.
Get the mic closer to you.
Okay. To make it easy, just to sum up, the initial questions related to matters you are dealing with in your statement, the disciplinary hearing of the company secretary, the senior manager IT, the head IT, the executive head risk, and the executive head legal.
The disciplinary hearings that I was asked about was in particular reference to the executive head IT and the company secretariat.
Okay, thank you. Was there a discussion about Mr. Madhava, the executive head of the listed investment?
There was a discussion in reference to a suspension that I needed to serve this morning, which dealt with, I believe, an outcome of a report from internal audit. The details, I was not privy to those details.
That's what I wanted to ask you. You were not presented with the report?
No, I was not presented with the report. And there was also another employee within the listed that also I had to serve the suspension also this morning.
And did you serve?
Did you mention a name of someone? You see,
Commissioner?
you're lowering your voice, so we can't hear clearly. Did you mention a name just now?
No, I didn't mention a name. I said an employee within the listed environment.
Within the listed investment side?
Yes, Commissioner.
Yeah.
Also been suspended.
You didn't mention a name.
I only mentioned responded to the question from the lead investigator around Mr. Fitelis Madhava. I had not mentioned a name with respect to the other employee, no.
All right, thanks.
Now, did you serve the letters of suspension this morning?
Yes, I did. So I served the letter of suspension this morning to Mr. Fitelis Madhava around 8:30. I'd called him in this morning just after 7 o'clock and informed him that if we could have a meeting at around 8 in my office, if it's available. He asked me what was it about. Then I said it's in relation to an outcome of a board meeting, and I would give him the details when we meet this morning.
The procedure followed to suspend an employee and what happened last night and this morning, is that the normal procedure of the PIC?
Ordinarily, Commissioner, you'd want to provide an opportunity for serving the notice. And this morning, obviously, that was a short time. From a procedural point of view, and I will refer to the disciplinary hearing later, disciplinary policy later on in terms of what you would need to do in order to serve that. You would make an arrangement for the employee to present himself or herself for the purpose of the meeting, and you will explain the nature of the meeting, the reason for the meeting, and also indicate the suspension that is going to be served, and provide an opportunity to respond either orally or in written form. That can be done at that very meeting, or it can be done at a later date, depending on the parties what they agree to do and what they indicate at that very point in time. So from a procedural point of view, there are some elements which I thought would have had an opportunity for Mr. Madhava to have, indicated his reasons for not being suspended. I did, however, indicate to him that at any other stage, as I've issued the suspension notice, that he may want to do that, he can do that. But at the moment, the suspension was with immediate effect.
Were you aware of the investigation conducted by internal audit regarding Mr. Madhava?
What I was aware of was a request that I need to coordinate meetings between internal audit and several employees within PIC. To that extent, that was a detail that I was aware of. whether it was an investigation, I think at that stage I was not fully briefed in terms of that.
Are you normally briefed when such investigations are conducted as the executive HR manager?
Ordinarily, you'd want to separate the two processes because investigations can, in some instances, be interfered with. So the internal audit department may conduct an investigation depending on where it emanates from. So it's either it will come through a whistleblowing or any incident that is suspected that requires investigation, and they will conduct that. HR would only be informed, like in this instance, either to facilitate the employee to present themselves, or at the end of that investigation, if there are any recommendations that need to be made, and HR will be briefed of the findings or the report by internal audit in that respect. So from that point of view, that will be the process.
Thank you, Mr. Commissioner. That is the introduction. Sorry.
Could you just advise us how big the EXCO is, in the total number of a full EXCO, whether they're in position or not? What is the total EXCO number?
So the approved structure for EXCO, permanent EXCO members is around 12. We also have EXCO invitees, which will be from different departments. So we'll have the head of internal audit, who will be an EXCO invitee. You'd also have a company secretariat who will be, facilitating, and arranging and recording of the minutes of EXCO. You'd, per invitation, also have the general manager of finance, also that will be within the EXCO team. And in certain instances, we'll also have the two other roles. That would be the assistant to the CEO's office. Then you'll also have the head of corporate affairs that will formulate that.
But if you've got a 12-person EXCO, and if I understand this correctly, in terms of suspension or resignations at this point in time, the CEO has resigned. You've got 4 executive heads, including the suspension of today. That would make it 5. Your company secretary is also suspended. That makes it 6. So in essence, 50% of the EXCO is either suspended or resigned. Is that correct?
That is correct, Commissioner.
And in addition, you've got a senior manager from IT that was suspended, and an additional person suspended from the listed investments today.
Just a correction on the IT department. We had an executive in IT, which was the subject of the mutual separation agreement. And then we had a senior manager in IT, security, risk, and governance. So that's one senior manager within the IT department.
Okay. But in essence, 50% of your EXCO is either suspended or resigned, including legal, risk, CEO, listed investments.
That is the current position, yes.
And IT, and the company secretary.
That's correct, yes.
Thank you.
Mr. Pulwani, just to conclude this, last night's board meeting, was it a full board meeting?
I think it corrected, yes.
Can you just enlighten the Commission who did most of the talking and questioning of yourself at the board meeting?
I initially came through and joined the meeting, and Ms. Busisiwe Zulu indicated that would respond to a set of questions, amongst which dealt with the suspension document, the charge sheet, the mutual separation agreement, and also later on the issuance of the suspensions that I dispensed this morning.
Thank you, Mr. Commissioner.
Can I just ask, I'm worried about the mutual separation agreement. Was that just a formal document waiting to be signed, or had it been signed? What is it?
So, Chairperson, the mutual separation agreement is also subject of my submission because I think it formed the terms of reference in which I was requested to respond to. It's a document that was entered to early last year, signed, and that was dispensed last year. So I was asked questions on it.
So it was not for purposes of the meeting that you were invited to? It does not involve Mr. Madhava?
It did not involve Mr. Madhava, yes.
I see.
Yeah.
Just for clarity on that, is it a generic mutual separation agreement, or was it relating to a particular person, and was it drawn up with the intent of implementing it with a particular person in mind?
So, Commissioner, the document, the mutual separation document, was not related to the parties currently that are suspended. It was related to a former employee, which was dispensed last year, I think around April, if I'm not mistaken.
Can I clear this up, Mr. Commissioner? The agreement was done last year, and at last night's meeting you were questioned on your opinion of the merits of that agreement. Is that correct?
That is correct, yes.
I'm not sure I understand. I mean,
Chair, the evidence will be that during last year, during a disciplinary hearing, the PIC, before conclusion of the disciplinary matter, entered into a voluntary separation agreement with the employee charged. That was signed and sealed.
and that employee was head of IT.
Head of IT. Exactly.
Now, what was it doing in this meeting?
The witness will testify later that he was asked whether he agrees with the agreement and the amount settled for by the PIC. Last aspect, Mr. Polwane, this internal audit investigation that was initiated against Mr. Madhava, when did it start? Can you tell or don't you know?
I would not know the exact date, but I think it was late in December.
Well, let me make it easier for you. You know that the whole top structure of the PIC went down to Cape Town to make a presentation to SCOPA.
That is correct. I'm aware of it.
Was
Yes.
this started before or after that presentation?
It will be after that presentation.
Thank you. Thank you, Mr. Commissioner. Mr. Commissioner, it's now nearly 1 o'clock. Can we take the lunch adjournment?
Yes, we will adjourn until 2 o'clock.